there are two parties, hire purchaser as well as hire seller. Sony Travels purchased 2 motor cars. Now who is Sony Travels? Is a hire purchaser. Why you are not going to record depreciation? Because you have already sold that asset. Now that asset is not in your hand, that is in the hire seller's hand. So you have to transfer that 4th year interest. How much? 11,460. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 4th session of Unit 2 of the subject Financial Accounting 1, and this is for first sem BCom students. So your Unit 2 is all about accounting for hire purchase system. So already we have discussed few of the concepts. So let us quickly recall what we have discussed in a previous session. So in a previous session I have covered this topic, that is journal entries in the books of hire purchaser. So here we have to prepare journal entries in the books of hire purchaser, and sometimes they will ask journal entries in the books of hire seller. So in the previous session we have covered this topic, that is journal entries in the books of hire purchaser, and also we have prepared ledger accounts in the books of hire purchaser. So how we are going to record the journal entry? So my dear students, as I told you, this is a very easy unit. Only thing is that you have to understand the concept and you have to know which are the journal entries. So what happens during hire purchase system? What is the first entry in the books of hire purchaser? So you will record entry for purchasing the asset. Next, second entry is for making the down payment, that is the amount which is paid on the delivery of that particular asset. And a third entry is for interest due, fourth entry is for installment paid, fifth entry is for depreciation, and the sixth entry is for transferring depreciation and interest to profit and loss account. So this is in the first year. Rest of the year what happens? You will record entries only for interest due as well as installment paid, depreciation charge, and you will transfer interest and depreciation to profit and loss account. In today's session, we shall continue with journal entries in the books of hire seller. So till now we have discussed about journal entries in the books of hire purchaser and how to record entries, that is how to prepare ledger accounts in the books of hire purchaser. In today's session, we shall discuss journal entries in the books of hire seller. As I told, there are two parties, hire purchaser as well as hire seller. Now, there are two parties, A and B. Now, A is hire seller and B is hire purchaser. Now, A transfers the goods to B. B makes a down payment. So, he makes some percentage of the total value of that asset on the date of delivery, which is known as down payment. And rest of the amount will be paid by B to A in the form of installments. So, it will be paid in the form of installments along with interest. That is, principal plus interest is equal to installment. Principal plus interest is equal to installment. Clear? So this is about hire purchase system. Now we shall see what are the journal entry that comes in the books of hire seller. Now think yourself, you are a hire seller. You are going to sell the goods to some other person who is known as hire purchaser. Now what is the first entry? First you will sell the goods, right? So for whom you are selling? For hire purchaser, right? So you will sell the goods. So hire purchaser account data to asset account. So asset goes out of the business, right? Who is receiving that asset? Hire purchaser. So debit the receiver, that is hire purchaser, to asset account because asset goes out of the business. So your first entry is for being asset sold on hire purchase system. So this is for selling of asset. Next, on the date of delivery, on the date of delivery of the goods to hire purchaser, what the hire seller is receiving? That is cash or bank. That is known as what? Down payment. So your second entry is for bank account data to hire purchaser account. So what you are receiving? You are receiving cash or bank, right? So from whom you are receiving? From hire purchaser. So being the down payment received. Clear about the two entry? That is on the date of, so these two entry takes place on the date of purchase. So you will sell the goods to a hire purchaser, your first entry. Next, you will receive the down payment. Next, what is the third entry? For interest due. So whereas in hire purchaser, so how do you record in hire purchaser book? So you used to record interest account data to hire seller account. Whereas here it is reverse. Hire purchaser account data to interest account. So this is for what? Being the first year interest due. So what is the entry? Hire purchaser account data to interest account. Next, your fourth entry is for installment received. So bank account data to hire purchaser account. So you are receiving installment from whom? Hire purchaser, and the installment will come in the form of cash or bank. So debit cash or bank to hire purchaser account, because you are receiving from hire purchaser, being the first year installment received. So hope you are clear with fourth entry. Your first entry is for selling the asset. Second entry is for receiving the down payment. Third entry is for interest due, that is hire purchaser account data to interest account. And the fourth entry is for receiving installment amount. And the fifth entry is for transfer that interest. So transfer that due interest to profit and loss account. So what is the entry? Interest account data to profit and loss account, being interest transfer to profit and loss account. Only this much entry, you will not have a depreciation entry. Why you are not going to record depreciation? Because you have already sold that asset. Now that asset is not in your hand, that is in the hire seller's hand. So it is in the hands of hire purchaser, and he will charge depreciation. So here in the books of hire seller, we are having only 5 entries. So which is the first entry? That is for selling of asset. Second is for receiving down payment. Third is for interest due. Fourth is for installment received. And fifth is for transfer interest to profit and loss account. We don't have depreciation here. Now we shall go through a problem. That is, we have to prepare journal entries in the books of hire seller. So as I told in a previous session, we have prepared journal entries in the books of hire purchaser. Now we shall go through a problem where we have to prepare journal entries in the books of hire seller. Now go through the problem here. On 18th Jan 2009, Sony Travels purchased 2 motor cars. Now who is Sony Travels? Is a hire purchaser. Purchased 2 motor cars. What they have purchased? They have purchased 2 motor cars costing rupees 3 lakh. Cost of each car 3 lakh. From whom? From Vikas Motors. Then who is Vikas Motors? Hire seller. So as I told, there are 2 parties, hire purchaser as well as hire seller. Now we know who is hire purchaser. Sony Travels. Who is hire seller? Vikas Motors. Under hire purchase basis. The terms of payment were. So how they have paid. Now let us see what is the cash price of the car. So here, cash price. So what is the cash price of the car? So they have purchased 2 motor car worth rupees 3 lakh. So 3 lakh into 2. So the total cash price is how much? 6 lakh. So 6 lakh is the total cash price of the car, out of which 25% of the cash value is to be paid in down payment. So what is the 25% of 6 lakh? 6 lakh into 25 divided by 100. So we'll get rupees 1,50,000. So they have paid 1,50,000 as down payment. Clear? Yes. Next, what they have told, balance amount, that is down payment is nothing but on the date of delivery of this motor car, he has paid 25% of the cash price of the cars. That is 6 lakh into 25%. So we will get how much? 1,50,000. So here the balance amount is to be payable in 4 equal installments of rupees 1,38,900 on 31st December every year. Now what they have given? They have given installment amount directly. So they have given installment amount directly. So earlier what we used to do, we used to divide into 4 equal installments. So we used to get principal amount. For that we used to add interest, then we got the installment amount. So as I told, installment is equal to principal plus interest. Clear? But they have directly given installment amount on 31st December every year. But we don't know whether this installment includes interest or not. Now let us see whether this installment includes interest or not. Now what is the installment? 1,38,900 into, so how many installment? 4. So how much you'll get? 5,55,600. So this is the total installment amount. That is, so they have told 1,38,900 into 4. So you'll get 5,55,600. So for this installment amount, that is for 5,55,600 plus they have made a down payment, right? How much? 1,50,000. So how much you'll get when you add? You'll get 7,05,600. Now see this, the total cash price of the car is how much? 6 lakh, right? So the total cash price is 6 lakh, but when we calculated, we got 7,05,600. In the sense, more than the cash price. So then it is what? It is interest. So this problem is relating to inclusive of interest. Once again, I'll repeat. Now, how much cash price they have given? They have told that they have purchased 2 motor car worth rupees 3 lakh. So the total cash price is how much? 3 lakh into 2, we got 6 lakh, right? So out of this 6 lakh, they have paid 25% as down payment. So if the cash price, that is cash price 25% is how much? 6 lakh into 25%. So we'll get 1,50,000 they have paid as down payment. But in this problem, what they have given? They have told that remaining amount, that is how much? 6 lakh minus 1,50,000. So 4,50,000 has to be paid in 4 equal installment, and they have given installment amount. Clear? So they have given installment amount 1,38,900. But we don't know whether it is inclusive of interest or exclusive of interest. For that, what you have to do? So they have told 4 years we have to pay 1,38,900 as installment. So multiply with 4, so you'll get 5,55,600. For this 5,55,600, add down payment, how much? 1,50,000. So you'll get 7,05,600. But what is the cash price of the car? 6 lakh. But what we got? 7,05,600. In the sense more, right? So it is more than 6 lakh. So that is known as what? It is inclusive of interest. In the sense, interest has been already included in this installment amount. Clear? Next, Vikas Motor charge interest at 9% per annum. So I have told you, so installment is nothing but principal plus interest. So here interest has to be charged at 9% per annum. Now what they have asked us to prepare? Prepare necessary journal entries in the books of hire seller. So we have to prepare necessary journal entries in the books of hire seller. Hope you are clear with the problem. Now we shall go through the table. So we have a table, right? So that we can clearly understand how we have to prepare or how we have to calculate installment. So they have given already installment. So we have to calculate principal and interest. So now go through the problem here. So that is the solution. We have to calculate calculation of principal, interest, installment and depreciation. So here we don't have depreciation. Why we are not charging depreciation? Because in the hands of hire seller, the asset is not there in the hands of hire seller, right? So we don't calculate depreciation. So we calculate depreciation only in case if they ask in order to record journal entries in the books of hire purchaser. But whereas in hire seller, we are not going to calculate the depreciation. Now go through this format here. So date, particulars, amount, principal, interest and installment. Now first on the date of purchase. So when did we purchase the asset? On 18th Jan 2009. So 18,109. So what is the cash price of the asset? So I have told you they have purchased 3 lakh worth car. How much car they have purchased? 2. So 3 lakh into 2. So cash price is how much? 3 lakh into 2. So the total cash price is 6 lakh. So then what they have done? On the date of delivery, they made 25%. That is 25% of 6 lakh. That is 25% of the cash price has been paid as what? Down payment. So less down payment. So when you calculate, you will get 1,50,000. Then what is the remaining amount to be paid? That is 4,50,000. And they have told we have to pay this 4,50,000 in equal installment, and they have given installment amount. Now we shall begin with the first installment. So first installment has to be paid at the end of that financial year. So that is end of 2009. 31st/12/2009, we are making the first installment. Now, in this case, how we are going to calculate? Because the installment amount they have already given. That is 1,38,900. So, take this installment amount directly. Leave this interest column, leave this principal column. So, take this installment directly, 1,38,900. Now, calculate interest. So, the amount payable in the first year is how much? 4,50,000 into how much percentage they have told? 9%. So 4,50,000 into 9% will get 40,500. Now what you have to do? 1,38,500 minus 40,500 will get the principal amount. Whereas if it is exclusive of interest, then what you used to do? So your principal remains same. So principal plus interest you used to get the installment amount. But here they have given the installment amount, and we have to calculate interest and we have to calculate the principal amount. In such case, write this installment first minus, so we have to calculate the amount payable is 4,50,000 into 9%. So we'll get 40,500. So 1,38,900 minus 40,500. So we'll get 98,400. So this is the principal amount. Now clear about the first year? Now come to the second year. So second year is 2010, right? So end of the year 31st/12/2010, we are making the second installment. Now, so the amount payable in the first year was 4,50,000, out of which we have to deduct this principal amount, that is 98,400. So we'll get 3,51,600 in the second year. That is the amount payable in the second year is how much? 3,51,600. Now directly come to the installment column. So we know the installment, that is each year we have to pay 1,38,900. Write this installment first. Next, calculate interest. So how to calculate interest? The amount payable in the second year, how much? 3,51,600 into 9%. So we'll get 31,644. Now how to calculate principal? Installment minus interest. So we'll get principal amount, that is 1,07,256. Now clear about the second year? Yes. Now come to the third year, that is 2011. End of 2011 is 31st December 2011. So now what is the amount payable in the third year? So in the second year it was 3,51,600, out of which we have paid 1,07,256. So we have paid, right? So minus that, so the amount payable in the second year is 2,44,344. So this is the amount payable. Now directly come to the installment column. So we know the installment, how much? 1,38,900 to be paid. Calculate the interest. So what is the amount payable in the second year? 2,44,344 into 9%. So we'll get 21,991. Now deduct. So installment minus interest, so we'll get the principal amount 1,16,909. So this is the principal amount of third year. Now come to the fourth year. So because they have told that the payment has to be made in 4 equal installments. Now our fourth year is 31st December 2012. We are making the fourth installment. So in the beginning of the third year, we had 2,44,344, out of which we have paid 1,16,909 as principal. So deduct that principal. So how much you'll get? 1,27,435. Now what you have to do? So directly write this installment amount. So for your fourth year, be careful. Don't calculate the interest directly. So what would be your interest in the fourth year? Installment amount minus the amount payable. So what is the amount payable? That is, they have told in 4 installment we have to finish making payment, right? So last year installment is how much? 1,38,000. How much? 1,38,900 minus how much the amount that has to be paid? 1,27,435 in the fourth year. So deduct this. So you'll get how much? 11,465. So in last year, I repeat, don't calculate the interest as you did in your previous installment. For the last year, we have to settle the account. So what you have to do? Installment minus remaining amount. So deduct that. So you'll get how much? 11,465. Now you got the interest. Now installment minus interest. So how much you'll get? That is 1,27,435. So you'll get the principal amount itself. So deduct this principal amount. So you'll get how much? 0 in the next year. So we are done with 4 installments. Hope you are clear with this table. Nothing much difference. So you are going to calculate interest same way as you did in your previous session. But here they have directly given the installment. So installment minus interest. So you will get the principal amount. Whereas in a previous session we used to get the principal. Then we used to add the interest. Then we got the installment. But here installment minus interest, then you will get the principal amount. And in the last year, be careful. Don't calculate as that of previous year. That is taking the percentage. So what you have to do? This installment minus the remaining amount, you will get a balancing figure, that is 11,465. So this itself is the interest. Then as usual, installment minus interest, so you will get the principal amount, that is 1,27,435. Now we shall directly move on to the journal entries. That is journal entries in the books of higher sellers. We are going to prepare journal entries in the books of higher seller. Now who is a higher seller here? Now if you see the problem, who is a higher seller? That is Vikas Motors. So we are going to prepare in the books of Vikas Motors. So he is a higher seller. Now what is the first entry? That is for selling of asset. So when did they sell the asset? So see the date. So they have sold on 18/1/2009. So 18/1/2009. So they have sold the asset. To whom they have sold? For Sony Travels account data to motor car account. That is nothing but hire purchaser account data to asset account. Being asset sold on hire purchase system. So what was the cash price of the asset? It is 6 lakh. So write this 6 lakh. Clear? Your first entry is for selling of the asset. So on the date the asset is been sold, the higher seller have received the down payment, right? So record the entry for down payment 18/1/09. That is on the date the asset is been sold. So he is receiving the down payment, right? So bank account data to Sony Traders account. So from whom we are receiving the down payment? From Sony Travels. That is Sony Travels account. Bank account data to Sony Travels account being the down payment received. So here 25% they have received. 25% of the cash price. So what is the cash price? 6 lakh into 25%. So how much we got? 1,50,000. Now we are done with 2 entry. Your first entry is for selling of the asset. Second entry is for receiving the down payment. Next, third entry, that is for interest due. That is end of that particular financial year, that is end of 2009, 31/12/2009, interest due. So here, what is the entry? Hire purchaser account data to interest account. That is for interest due. So being the first year interest due. Now go through the table. So I'll get the first year interest. So what is the first year interest? 40,500. So we have already calculated 40,500. Next, your entry is for installment paid, that is end of that financial year 31st/12/2009. So not installment paid, installment received, because it is, we are going to prepare journal entry in the books of hire seller, right? So installment received. So bank account data to Sony Travels account. So from whom we are receiving? From the hire purchaser. So here hire purchaser is Sony Travels. So being the first year installment received. Now go through the table. What is the first year installment? 1,38,900. So write that amount. Clear? So what are the 4 entries now? First one is for asset sold. Next, down payment received. Next, interest due. Next, installment received. And the last entry is transferring the interest to profit and loss account. So 31st/12/09, transfer the interest. So here we have credited the interest, right? Now we have to debit that interest. It's nothing but transferring the interest to profit and loss account. So interest account data to profit and loss account. So what is the first year interest? 40,500. So transfer that. Now clear about the first year. So till here these entries are relating to first year. Now come to the second year. In second year there is no selling of asset as well as receiving of down payment. Directly we have to move on to interest due. Next, installment received. Next, transfer of interest to profit and loss account. So at the end of second year, that is for interest due 31st/12/2010, Sony Travels account data to interest account. Same as your previous year, the entry will be same, only the amount differs. Sony Travels account data to interest account being the second year interest due. Now go through the table. What is the second year interest? That is 31,644. So 31,644 is the second year interest. Next, installment received. That is end of the financial year 31st/12/2010. Interest received. Bank account data to Sony Travels account. So from whom we are receiving? From the hire purchaser. So here hire purchaser is Sony Travels. Being the second year installment received. So what is the installment, second year installment? It remains same, 1,38,900. 1,38,900. Now transfer this interest to profit and loss account. So at the end of the year, interest account data to profit and loss account being interest transferred to profit and loss account. So second year is interest is how much? 31,644. So transfer that interest to profit and loss account. Now come to the third year, that is 2011. Clear? Now your first entry is for interest due. So what is the entry? Sony Travels account data to interest account being the third year interest due. Now go through the table. What is third year interest? 21,991. So record that, 21,991. Next, installment received. Bank account data to Sony Travels account. So what is the installment for the third year? It is 1,38,900. So here the installment remains same because they have directly given in the question. So record that. That is how much? Bank account data to Sony Travels account 1,38,900. So this is of third year. Next, transfer that interest. Transfer this interest to profit and loss account. That is end of the financial year 31st/12/11. Interest account data to profit and loss account being interest transfer to profit and loss account. So the interest was 21,991. Transfer that interest to profit and loss account. Now coming to the last year, that is fourth year. So here also your first entry is for interest due. So what is the entry? Sony Travels account data to interest account being fourth year interest due. So here what is fourth year interest? So here it is 11,465. So 11,465 is the interest. Next, what you have to do for installment received? So bank account data to installment or bank account data to Sony Travels account, that is for installment received being the fourth year installment received, and your installment remains same. So if you go through the table, what is the installment? 1,38,900. That is for installment received. Next, as usual, transfer this interest to profit and loss account. So what is the entry? 31/12/2012 interest account data to profit and loss account. So you have to transfer that 4th year interest. How much? 11,465. This is how you are going to prepare journal entries in the books of hire seller. In my next session, I am going to solve a problem relating to ledger accounts in the books of hire seller. So in today's session, I have told you we have prepared journal entries in the books of hire seller. In my next account, we shall solve a problem relating to ledger accounts in the books of hire seller. So if you know the journal entry, it is very easy to post that entry to ledger accounts. So my dear students, hope you all understood the session. See you all in my next session with a new problem. Till then, take care. Thank you.